without further ado, man, we got a special guest in the house. Welcome, Andrew.
I appreciate you guys having me on. Thank you.
No, we're happy to have you, man. So we know who you are. Obviously, we met through Paul Alex. For you guys, he was just here a couple of weeks ago, guys. From ATM Together.
Yep.
But we know who you are. But for the people that might not know who you are, can you introduce yourself to the people, please?
Yeah, my name's Andrew Imbesi, and I help businesses get funding. I mean, simple as that. We focus mostly on 0% interest business credit cards. We've helped over 3,000 people in the last 2.5 years get more than 110 million in funding from the banks. So that's what I've been doing. It was something that worked very early on for me when I got started with entrepreneurship, funding different businesses and investments. And it just became something I started being known for in the circles I was in. Because there's a lot of people who had this same problem where they were looking to get access to funding, or they were trying to take advantage of a business or a mentorship program, and they didn't have the money to get started. And so someone had helped me get access to credit. And then I started helping some other people because at the time I was doing sales and I was a closer for like another company. And people were trying to buy this $10,000 mentorship, $25,000 mentorship. So I started showing them the tips that someone had shown me. And then I started seeing a lot of people doing this funding business. And I said to myself, well, I'm doing it myself. I might as well help more people with it because it's something I enjoy doing. It's fun. So that's how, I started running my business. I was willing to figure it out. And I want to see other people figure it out too, which is why I think I really just love doing this.
And I really like the fact that you brought up the two angles that you have for getting capital, right? So you can go getting a bank loan, right? A traditional bank loan, which they're going to want your maybe tax returns. They're going to want everything.
Proof of income, all that stuff.
Proof of income. You got to have 2 years of employment, etc. Like every time I apply for a mortgage, guys, right? When I buy a house, they get, I got to give them so much goddamn documents, right? Because the housing crash or whatever, and they're sensitive to lend money. I got to give them so much documents to be able to go ahead and get that loan to buy a house. However, on your perspective, where it's like, look, you can get up to 150K off of a credit card, which will allow you to get your business started. And I really like the fact that you mentioned, like, yes, a lot of these credit cards give you 18 months, 24 months, 0% interest. So you can kind of, I don't want to say let the debt build up, but like you can let the balance go up a bit, become profitable, and then start paying it back. And then you also mentioned that you guys have, which is wild to me, you guys have private lenders that will temporarily pay their credit cards off so that they can get their credit score up to that 700 plus, apply it to get the credit card, and then begin the process.
Yeah. I have a really good friend. His name's Curtis, and he has a debt fund. So this is like his business is doing bridge loans. They're very common in real estate, doing bridge loans, and he has a different twist on it, doing it for credit cards. And it's a huge opportunity for people that want to start a business. They maybe don't have that much money in their bank account to get started. And the only thing stopping them is getting the funding, but they have all this credit card debt. And I think the most important thing for someone like that too is, say if you're one of those people who, you're behind on some credit card bills and you don't have like a lot of money, but you want to invest in yourself. The biggest thing that I've seen with and you've probably seen a lot of the same thing, is with entrepreneurs, with people who want to be successful, the confidence that they have, the knowledge that they have, those are two huge things that they need going into it, doing something like this. Because if they have a lot of confidence in themselves to make it go right, and they acquire the right knowledge in terms of business skill or whatever industry they want to get into, those things are just huge to back them up when getting into something like this. Because the last thing anyone wants to do is just find themselves in a hole, like you mentioned before. And it's so important to be able to actually have that confidence and the knowledge to grow and scale business.
Okay.
What about putting up money to get a mentor? How does that work, you'd say?
Oh, I think that's like my favorite thing to do, to be honest. That's really what I did. And my clients ask me this all the time was, where did you invest your money? And for me, I invested back in myself. I invested in mentorships. I knew that I needed to learn skills like sales, marketing, how to run a business, because these are all fundamentals of growing and scaling a business that's successful. So I think mentorships is just like the best route to go. Like if you're watching videos, you can only get so far, but when you're actually working one-on-one with someone who's done the things that you want to do, it just makes the path so much easier for success. I had to learn that lesson really early on the hard way. Like, it's not buying these small courses. Like, be willing to pay a little bit extra, even if it's $10,000 or more, to go work one-on-one with someone who knows what they're doing. You're going to thank yourself later. I know it's like it's a leap of faith, but it's just so much more worth it that way.
Yeah. So take us through, I guess, the process of how one can do this. We got a little bit of your background, the importance of getting capital to start up a business, especially in today's day and age. How could someone go about doing this?
Yeah, and I like what you say there too, because I've been working a lot with the Cardone guys like Brandon Dawson.
Okay.
And this guy is so smart. He said that 97% of businesses fail within 10 years. And there's 3 reasons why they fail. It's number 1, it's a lack of good people. So there's like a lack of good people inside your business, or you can't find good people. They're disengaged. They're not really there for the mission, vision, values of your business. Number 2 is lack of product demand. Like your product is just not good enough. People don't want to actually go and buy your product, and there's not enough people out there. So that's number 2. And number 3 is a lack of working capital. So they don't have enough capital to actually start or scale a business. Step number 1, have a good enough credit score. Like I always tell my clients that give the bank no reason to say no.
Right.
Make your credit as good as what it can be.
And 700 is 100% doable, by the way, guys. If you just pay off your credit card debt, like or get it down to a low balance, you're gonna shoot up to high 600s, low 700s.
Yeah, definitely. No, it's really simple. Just be on time with your payments. Like the minimum requirements we usually see for people is like 700 credit score, less than like 20 or 30% utilization per credit card.
Yep.
Ideally, they have no late payments, but I've still been able to make it go right for people that have maybe 1 or 2 30-day late payments.
Yeah.
As long as they have the 700 plus.
Yeah.
They own at least 1 credit card for at least a year or 2. And these are like bare minimum.
Yeah.
They're not going to get crazy $150,000 credit card results, but they'll get something.
Yeah.
And I only had 20,000 when I started.
Yep.
So that was game changing to me. And so the first step is 700 plus credit score.
Okay.
Number 2, if you want to get business credit, now the benefit of having business credit is that it doesn't report to your personal credit score.
Yeah.
So you could max out an entire business credit card and it does not report to your personal credit like these personal credit cards do. So that's huge because that helps, especially down the road. If you want to continue getting more credit, your personal credit score is good. And that's really all they're looking at. Those are the first 2 steps. From there, really you just look for the best strategy at each bank. Now, everyone has a different funding plan of different banks that you'll go and apply to. For someone who lives in Florida, it's going to be different for them than it would be for someone who lives in Montana. Shout out Matt.
Okay.
He's
all
like
right, because they'll
one of my
have
top
different, I
guys.
guess, offers there and benefits in different states that you might not necessarily have available to you in a certain state.
Yeah.
Okay.
Yeah. So different banks like do different regions, right? So take like Truist, for example.
Okay.
They're only in 19 states.
Okay.
They're only in the southeast area of the country. So someone who lives in Oregon or Washington or Idaho, they aren't going to be able to apply for Truist unless they have a Southeast LLC. And even more, they're like, you got to know how the banks work.
Yeah.
Is really what I'm getting at here, is that with a bank like Truist, for example, like they're super huge on fraud, and they have policies in their bank where they're very, very tough in terms of applying remotely. You have to go into the bank.
Okay.
So for someone who lives in Washington, they may not have that same luxury as someone who lives in Florida. And we typically get pretty good results from that bank. Like sometimes people get $10,000 to $25,000 per card with that one bank.
Wow.
Yeah, exactly. I'm getting all this cash back every month with that card.
And new customers as well.
And new customers.
Actually, that's why I saw you for the first time. Some of your ads.
Yeah.
Yeah. Online. That's crazy.
It
works.
Okay. So the Amex and the Chase are the Blue Business Cash, and then the Inc. Unlimited are. Then that looks that could work anywhere, whether you're in Texas, Florida,
Exactly.
California. Let's say let's because you mentioned something about like regional banks, which I think would be I don't know if that's too much sauce for the people, but if we could share.
That might be for the private Zoom call.
Okay. Can we share? You gave Truist earlier.
I'll give you some. I'll give you some.
Okay, yeah, whatever you could disclose, and then go ahead. So, what banks can people?
So that
go
would be
to?
like a good one, right?
Yeah.
And I think the best answer for just a wide range of people is just look what's in your area. And the best way to find out, and look, there's going to be a little bit of work involved with this, is just actually being confident, just approaching a banker and asking them questions. I think a lot of people think that bankers are standoffish and that they don't want to let you in. But relationship managers and bankers are incentivized on you opening an account with them.
Yeah.
Like that's their comp plan. That's their incentive bonus. Like with my Chase relationship manager, and oh my goodness, we wrote they recently just actually made the policy a little bit stricter with our relationship manager that he can only take clients inside his footprint. So he was in Kansas, but he was helping us with all 50 states. He opened over $30 million. I think actually, no, it was over $70 million. When he sent his like goodbye text, he was like, we did it, 70 million. That's it.
What if someone wants more money? Let's say they need 20, 30, 40, $50,000. How should they go about that?
Yeah. I mean, I obviously have a program, right?
Yeah. What you could disclose, of course.
For sure, of course. Well, I mean, really it comes down to like a lot of what I just mentioned, right? Is discovering what the best strategy is for each place. And each place has, a different maximum exposure that they're willing to lend to someone, right? Some banks are only going to be willing to give you up to 25,000. Some banks are only going to be willing to give you up to 50,000. Some banks may only come back with 3,000. And if you're someone who's really trying to stack, like maybe you're trying to flip properties, or maybe you're trying to, do Amazon or something like that, something that's super heavy cash flow and you need money.
Yeah. A food truck, restaurant, something with like a restaurant where you're dealing with like, you got to buy, you got to have a location, etc. Yeah.
Yeah. Look, you want the big key here is that you just really need to be well equipped and know the best strategy for each bank. It's knowing what you're going to get from each place and what bureaus they're going to pull from. Like the best way to answer that question, because it's kind of like, I think in my mind, two questions in one, right? Yeah. So it's like, how do I know how many banks to go to, and what do I do? So each bank pulls from a different bureau. So normally we like to stick to around 2 to 3 inquiries per bureau, and for the people who have really good credit scores, they can go and hit 4 inquiries per credit bureau, right? Like this bank will pull Experian, this bank will pull Equifax, this bank will pull TransUnion, and that stuff is very important to know, because in understanding the credit score requirements, things like that, understanding the exposure that each bank is going to give you.
How'd you find that out?
A lot of research, man.
That is tricky, bro.
It is tricky. It takes a lot of time. Even in the beginning for me, like I was learning all this stuff. I wouldn't say I had like a mentor actually who taught me this. I just had a lot of experience. I saw some YouTube videos. I had someone who taught me like a very simple strategy in the beginning, and then I just expanded on that strategy. It was a very simple personal credit card strategy that I expanded into a business credit card strategy. And, and then I just got resourceful on my own to figure out what's the best strategy for each place. It's not even just simply maybe one in person, one this. I think the best way to go about doing it is figuring out what do you need. And if you don't want to open up a ton of credit cards, how many places do I need to go to? Which place is likely going to give me the most here, the most there? Oh, maybe not this place because it's not going to give me a lot. So it's really just planning around what are the best places to go.
So these other countries offer it too. They just might not offer 0%.
They're not as great as the land of debt.
Yeah. The United States was built on that, so that makes sense.
Yeah.
What else do we got here? And guys, get your questions in now while you guys can. We're going to go into a Zoom call here as well, where we're going into way more detail with some of this stuff. Myron, do you think it's a good idea to get a business credit card and use that money to invest in an ATM? Okay, that's a good question.
That is a good question.
Because Paul Alex obviously has the ATM business. What's your thoughts on that as far as like getting a business credit card to fund maybe getting your first ATM?
That is a good idea. I think the best way to use 0% business credit cards is to get a return on investment before the end of the introductory period.
Bam.
Right? Because you don't want to start paying interest after 12 months. Mm-hmm. So for someone like that, right, like get very strategic. There's cards that will do 0% for 18 months. Mm-hmm. And just do the math, right? Because if you're going to be able to pay off that ATM within, however long it takes, now you have that asset. And I think Paul was telling me that the average lifespan of an ATM is like at least 5 to 10 years.
Yeah.
Which is pretty nice.
Yeah.
Like that's going to be a nice like cash flowing investment. Another thing I think he told me one time too is that buying the machine is also a tax write-off, I think.
Yes.
There you go.
Yeah. It's a no-brainer. So I would say same thing with using credit cards. I want to ask you this because you talked about liquidating credit cards. Can you explain that real quick to the audience, what liquidating a credit card is and how that typically works?
I'm actually so happy that you brought that back up, because this is something that a lot of people miss about credit cards. They think that just because I got a credit card, I only have a credit card.
Yeah.
They don't see the fact that you could actually charge that credit card as a purchase through someone's payment processor. I'm sure they have balance transfers and stuff, but you could charge your credit card as a purchase through someone else's payment processor. Number one, you're getting that purchase now at 0%. You're getting the cashback bonuses too. And you just simply have that person wire the money back to you. All you got to cover is the payment processing fees, and that's not even money that you're putting up front like you would for a traditional loan. For a loan, you're paying those origination points up front a lot of the time, or at least in my experience.
Interesting, because the way I've always seen it is doing the balance transfer way, which typically for the audience that might be what you want to explain to them what a balance transfer is?
Yeah, sure.
Yeah,
so
real fast.
It's like moving your balance on a card that you have debt on to a new credit card. You just call the new credit card company up and give them your old credit card that has the debt. You just call that new credit card company and just say, hey, I want to pay off, I want to do a balance transfer. You tell them the card, and then they move it over.
Yeah, and then that will also help you. Like, let's say you're running out of time with that intro offer on that one card, you can move it on over to another card and still get the benefit of that intro fee.
0%.
And then,
a balance transfer is usually a 3% fee.
Yeah.
You could pay it back at 0%. And a credit card liquidation, like processing a transaction through a payment processor, is basically the same fee.
Okay. Shit. So that's another way to get around it as well if you can't do the balance transfer. Giving you guys strategies, man.
Dave Cook.
I began a concrete company this year and have a credit score of 700. I've been able to save almost $100,000. However, in order to scale and risk folding over, I really need more access to capital. What would be the best course of action in order to acquire more? So bam. So we got a situation here. 700 credit score.
100K.
He has almost $100,000 liquid to his name. And he wants to scale and use credit cards because he needs more capital.
Yeah, that's a good question. I mean,
construction business or concrete.
I would say, like, if your business is over 2 years old, you're going to have a lot more opportunity to get more products. And by the looks of your business, it looks like you have like assets or collateral, things like that. And so, but beyond business credit cards, you could go look into different business lines of credit, where sometimes with half of these banks will do it unsecured and maybe give you like a $50,000 line of credit offer. My suggestion to people is always this: like, get as many 0% interest business credit cards as you can, and then after that, go for business line of credit. And for someone like that,
okay,
you know, you may have inventory, you may have accounts receivable, you may have something that half the banks are going to give you something unsecured, right? And then the other half are going to ask you to secure some kind of collateral to get a line of credit. And so this is like a larger strategy to go beyond just getting usually between $50,000 to $250,000 at 0%, to then adding an additional 6 figures of lines of credit if you have a business that's over 2 years old.
Okay.
Yeah,
you know, man.
That's smart as hell, bro.
Yeah, man. It's all about being creative, guys.
Because I just did the other, stuff, the real estate stuff.
Oh, yeah.
So
the HELOC.
That's
You
even
did a
better.
HELOC, yeah.
That's even better.
Yeah, and you don't need as much paperwork to do it, dude.
Yeah.
At all. Like a home equity line of credit, they want all this shit from you,
And
bro.
it doesn't affect your personal credit either when you max out those cards.
There you go.
Because now that, I mean, the home equity line of credit, like, you could max it out. It doesn't really affect your credit score, but it does impact lending decisions. Like, sometimes some banks will be like, hey, you have this maxed out home equity line of credit. Like, we may not give you anything. Some banks are like cool with it. Some banks are not cool with it. Even though there's nothing wrong with your credit score, which is very interesting. Like, I had a guy, he had like an 800 credit score, but he had a maxed out home equity line of credit. And we actually struggled for a little bit to get him business credit. Eventually he paid.
Shit.
Yeah. I mean, even with an 800, but it's because he had like $200,000 of debt maxed out, you know?
Yeah.
So the bank obviously doesn't like to see when
Very scary for them.
Yeah, it's very scary. Like, you already have a lot of debt you have to pay back. It's not like a traditional loan, like a mortgage or a car loan, right? Or like student loans. And that's another big part about these lending decisions too, is you can have debt, guys. Like, you guys can have mortgages. You guys can open a brand new car loan. And I think, you know, the bank really likes to see what kind of discretionary spending you do, because like the more discretionary debt you have, where it's like your own decision versus something that's very typical and most people have, that also plays a factor too.
Okay.
Well said.